with most investors going about life, investing, and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the US financial system in the past 18 months alone. I just want to share with you a report we have just put out. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends that you take immediately. So if you'd like a free copy of the report, you simply have to go to 2022wakeupcall.com. Again, that's 2022wakeupcall.com. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. We are catching up with Peter Grandich, founder of Peter Grandich and Company, post a very big Fed week. Peter, always good to be with you. Welcome back to the show.
Always truly a pleasure to speak with you, Daniela.
So curious to get your thoughts on the latest Fed move here. We saw the 50 basis points put on the table, the 75 basis points retracted. The markets at the onset reacting favorably to the news, then retracting a bit. But the bigger question is, we've now entered the biggest tightening cycle that we've seen since the 80s. What does this signal to you?
Well, let's not forget that it wasn't too long ago. The Fed said that they foresaw inflation staying in the 2% range for quite a few years. Then, as it started to inch up before all the serious problems took hold, it was just transitory. But now, thankfully to his speech, it'll all be good. We'll be able to handle it. Sort of was the reaction, at least initially, by what can only be termed by me anyway, the don't worry, be happy crowd on Wall Street, because the situation is so beyond what the Fed can do now, Daniela. It's not anything compared to the 80s. First of all, one of the biggest things people have to remember, besides that a lot of financial advisors that are giving advice now weren't even born in the 80s, we were the largest credited nation back then. It was a lot easier to raise rates and withstand a deep recession in order to kill inflation. That's not the same case now. First of all, if rates go up a lot, we have trouble paying our interest on our debt that's over 30 trillion. We also have a problem that if we get too nervous about the stock market and ease up and allow inflation to get even more out of hand, we have 2/3 of Americans who are living paycheck to paycheck and don't even have $1,000 saved for emergencies. And they're seeing what little room they had evaporate because of higher energy costs, food costs, etc. So it's a completely different animal this time around. And it's not going to take as much pain and suffering to cause much more hardship than it did in the 1980s.
Do you think it was the first time that Powell was actually recognizing the severity of the inflation? Did you get that from the speech?
Well, what I got is my personal opinion is let's not forget, and of course, so much stuff has been put under and forgotten about in recent times. Let's not forget that we had a Fed until most recently that we discovered that we had governors who were actually trading the market while the Fed was in one of the most easy monetary policies ever, where basically if you knew they were going to stay that way, it was almost a no-brainer to be long stocks. So I think he comes out of an environment where he didn't have to make a lot of difficult decisions. I think there's a lot of political pressure now that might have not existed back in the 80s for other Fed governors. And of course, that's what everybody's expecting. There's an anticipation that he's only going to stay tightening for only a short period of time and then cave to either political or market forces. But I think this problem is so much bigger and is only first getting started that it's not really going to matter. And it's going to take a real severity over a long period of time to fix many of the issues that have been going on for years. This is not anything that just started during his time or from one party or another. This is something that's been building for decades.
So do you think, and to that point, do you think that the market's initial reaction, like I said, we've come back from that reaction, immediate reaction, was that, oh, okay, a few 75 basis points is off the table for now. Powell seems confident, speaking a little bit more confidently that he'll get that soft landing the Fed is looking for. So my question to you is, what will happen to the stock market now?
Well, Daniela, the bigger problem and the main reason why I got out of, for myself, the general equity market and bonds before the end of last year is that there's a significant issue that a lot of people don't want to hear, but I'm going to say it because you've always had me on to speak my mind, whether it was
Absolutely.
popular or not. Almost two-thirds of financial advisors have been in the business only since the last financial crisis, and the vast majority have only been in since the new millennium. And other than a couple short-term interruptions, it's been a one-way street. This is something that has not been seen or experienced by a good lot of people that are supposedly here to give people advice. The second issue that we have also is that we were so oversold, we were so beaten down that realistically, unless he said something completely that no one was expecting, to see the initial reaction was not surprising. What I think is most important is I think you're going to see in the coming days, long after we complete this interview, that people are going to start to talk about as the market turns back and the 10-year gets above 3%, people are going to start to say, wow, he made a mistake. He really should have done a 75 point because now he's still behind the
Yep.
curve and it's going to have to be more aggressive. So I think that's what you're likely to be discussing over the coming weeks versus all the enthusiasm that happened initially after that announcement.
So do you think Powell was anticipating, and Powell and the Fed, I mean, anticipating that reaction, and then this will justify them doing a 75 basis point hike the next time around?
My personal opinion is I don't think they have any real idea what could possibly to be done other than, hey, we got to tighten. We can't stay loose because, listen, we are only first just experiencing the inflation now. What's happening in China is the most biggest issue that is yet to be talked about in the market in a big way. Why has a country so powerful, both militarily and economically, knowing full well that lockdowns don't solve this COVID problem, have allowed such an issue to go to where their ability to manufacture and provide the world with needs and goods is not happening? And what impact is that going to have on the US? And I think that's going to be the bigger issue we're going to be talking about in the coming weeks and months. So we haven't even seen really the real hardness of that. And now we're seeing that Russia has still managed to sell its oil. The ruble has recovered, thankfully, because they had smart enough to use gold in a way to support it. And so I think the Fed really is flying by the seat of their pants, and realistically, the issues they face, most of them they have no real influence on.
And to your point about the Shanghai lockdowns, I agree with you. I don't think we're speaking enough about it. And I just had a great interview, and it will air soon on Stansberry Research with Gordon Chang on this very topic. And I asked him that very question. Why do they want to absolutely destroy their economy? I'm asking the same thing you're asking. I don't have an answer.
Well, I have a speculation because none of us know for certain, okay? But I really believe that they realize that as much as it would make them sneeze, it's going to give us an awful cold. So they're willing to take sneezing in exchange without ever having to fire a weapon, hurt us very badly economic and the Western world. And I think that's the main reason behind that. And quite frankly, I don't think America is prepared yet to understand what it's going to mean to have food and energy shortages in a big way over a long period of time.
But to that point, Peter, why can't it be a wake-up call that, hey, let's stop being dependent on China for supplies and look again to making this stuff back here?
Eventually we have to, but that's something that's like a battleship. You can't turn it overnight. It just can't flip a switch and do that. Let's understand that we really had no real idea as an American as a whole until the pandemic hit. And suddenly in the early days of the pandemic, people realized that medicine and everything that they were dependent on came from overseas. Now we're learning all the strategic metals, energy needs, all the things that we need for day-to-day life, fertilizer, all the things that we just assumed and never recognized were out of our control. And then the one thing that we had become energy independent. We were at the point where we could support our own needs, and a new president came in and decided the way that the past guy did it is not good, flipped it, and now I think we're paying a price for that as well.
Okay, I want to get back to this inflation story because I want to get your gut feeling about where we're headed with inflation now. Like I said, Powell seems confident this will fix it, the rate hikes. What's your feeling? Have we hit peak inflation? Do things get worse? Is it too late? They're just behind the curve. What's your feeling?
A, they're behind the curve. B, it's not so much of what the rate's going to be, but how much interest rates are lower than that and how much higher they will have to go to surpass it. Listen, the general economic lesson, and I think it still pertains to us, is eventually the interest rate has to be higher than the inflation. But let's understand that this is such across the board shortage, and every industry that I know of, my clients are business people throughout the United States. It really doesn't matter what business they're in. They're not only were first crying a year or so ago about a labor shortage, but now a much bigger problem is parts, service, all the things that might have taken 4 or 6 weeks to get, they may get in 4 or 6 months, and they're paying double digit and very high double digit higher cost to get it. That's not going to be solved by 1 or 2 Fed raises or raising rates to 3% or 4. It's likely going to take a much higher level over a longer period of time when it's clear now also that the economy is peaking and likely to slide. So we're going to use a word that, A, as I told you earlier, a lot of financial advisors never did because they weren't even a twinkle in their dad's eyes at the time, but with something from the 70s and 80s, it's called stagflation. And that's where we have an economy weakening, but we have inflation constant or still rising. And so that doesn't have to be 15 or 20% to be damaging. It just has to be higher than what current rates are. And the Fed will have no choice then to have to raise rates or decide to become a third world country, which most of those countries decided to do in the 60s and 70s when something similar happened, and just go back to printing a lot of money and hope monetization solves the issue.
Does it trigger a recession?
Oh, there's no question there's a recession coming. Uh, the argument will be is when if the good Lord keeps me alive and you wish to have me again towards the end of the year, will we be not only talking recession, but will we start talking about a depression? That is the $64,000 question, and that's going to come basically on what this story out of China is all about. Because if for whatever reason this is not solved, so to speak, or they go back to normal in the next month or two, in the fall we still have this issue, then the economics around the world combined with everything else that's happening is really going to cause some very, very hard economic issues, which I don't think the publics in general here in the US, where social and political disharmony is at the highest level. Listen, it's worse now than it was at the onset of the Civil War. There is such a discrepancy between left and right on how every issue you and I could talk about now. And so with all that happening, plus the general things we just spoke
Yeah.
about, it doesn't paint a good picture for the future anytime soon.
A point that Gordon Chang brought up in that interview is that he finds it interesting that China and Russia are both, crumbling at the same time.
Yeah, but also China offers a much more challenging issue. They're in a much better financial shape, even though their markets and things are not at the best at this point in time. They certainly have a stronger military than clearly Russia has. And let's face facts. One thing Trump was right about it, and I'm not here to talk about Donald Trump. We'll get into that. And quite frankly, I don't think it would be good that he run again. I think he's too disliked by enough people to cause an issue. But one of the things he was right about, he kept saying to NATO, I don't understand what we're doing here. You want us to spend all this money and build this defense against Russia, but you folks have all depended on your energy from Russia. You can't have it both ways. And we're realizing now what an issue that is. And it's easier now for those countries because they're coming out of winter. But if that issue goes on and drags on through summer and it starts to come fall again, then Russia has its cards all over again, and it just makes the issue that much worse. So the Russia-China's 1-2 punch, I think, is coming. We haven't experienced or really focused on the China part yet because we've been caught up in this terrible war that's going on.
And I guess to your point, just going back to stocks, I want to bring up a quote from legendary investor Paul Tudor Jones that he made earlier this week. He says, "You don't want to own bonds and stocks in this environment." And Paul Tudor Jones did call the 87 crash. He says he can't think of a worse environment for financial assets than right now.
Well, as you know, that was my view. Certainly, I said between last Labor Day and the end of the year, I wanted to be out of general equities and bonds. And anybody that still wanted to listen, I told them the same thing. I look around again, the only market that I find that I could risk capital on for capital appreciation is the gold market and things related to it. And, also energy things related, uranium. But general stocks and bonds, they've had a phenomenal run. They were overdone on the upside, and everything in life is a pendulum. It swings from one side to the other. Back in early 80s, no one wanted to own stocks or bonds until some unknown man named Robert Prechter Jr. had the audacity to come out and predict 3,700 on the Dow, which had only traded between 700 and 1,000 for 3 decades.
Yeah.
It seemed unheard of. How could that happen? And now, last year, when I spoke about this terrible markets coming and all, people said that can't happen. You don't understand. This is different. It's never different. So I fully respect what Paul is saying, and I concur with his thoughts.
Just a point on the gold market, since you're one of the most recognizable faces in this sector, Peter. Obviously, frustration from gold investors as we tiptoed around 2000. There's cheer to only come back down. I know other gold bugs will say, well, just see it as a buying opportunity, but still it's frustrating to always get, near the 2000 level to only come back down. What's your take?
Well, I don't consider myself a gold bug. I was out of it for 5 years. You're the one that dragged me back into all of this and doing interviews and everything, but which I'm happy for, as you know. I think you're one of the, if not the best, you're in the top 1%. How about that? So, in investing, I'm in my 39th year. What I've learned after making and losing more money than I ever imagined at different parts of my career, it's not how much you make, it's what you don't lose, which really going to separate you. And what gold has proven time and time again is it's proven what it really was set out to be, and that was a safety valve, an item to have when things become difficult. We've seen that, and that's why we see these liquidation periods when financial assets turn down. But never has that market, that industry, been in the shape that it's been in now. For years, it was always, as soon as the market took off, these mining companies would leverage themselves up, buy all these projects and get involved in all places in the world, run into problems, and then as soon as the gold price turned down, they collapse. This time, the mining companies, especially the majors, are in phenomenal shape. They're kicking off great free cash flow. They're involved now, especially those that are looking for base metals and all, recognizing how the world has foregone and not realized if you're going to have all these wonderful things, electric cars, all these type of EGS things, you need base metals and you need certain types of metals. So from the major standpoint, they're in great shape. The junior market is always a struggle. It's even more difficult now for a variety of reasons. But the gold price itself, I have used this 10-year chart. I've never seen, it's the best bullish chart I've ever seen in any market. It's commonly known as a cup and handle. And if you look over the last 10 years, we have traced out a near perfect technical pattern known as a cup and handle. The handle's just about to be completed. So I will risk and go out and say that I think the next $500 or 1,000 is up, not down. I don't know exactly when, but I think the risk of loss in gold is so minimum versus what still is going to happen to people that own a lot of stocks and bonds.
So it's about preserving your wealth. And so what do you say? What's your response to folks like Max Kaiser?
Gold is not moving because you don't have genuine price discovery in gold because there's too much of concentrated in few hands.
It is moving, but you want leaps and bounds.
No, it's not moving. Over 10 years, it's done nothing. It's at 0% in 10 years. It's been dead money for 10 years, Daniela.
Why would you be in that?
Well, I don't want to get into name calling, so let's just say that is not someone, including the other person who's the most advocate for Bitcoin itself, is someone that I would listen to and trust with my own capital. What I will say is this: for some reason, unknown reason, it worked for a couple thousand years. A lot of other things came and gone, whether they were other type of monetary systems, products, services, and gold managed to stay around. It's a relic, especially to younger folks, but I'm going to say that if it worked for a couple thousand years, there's not been anything yet to tell me that it's all said and done and it's dead. And quite interesting, if I may, the thing that we were sold on about why you're supposed to own Bitcoin and own a year ago, many of those factors occurred these last few months. And what happened? It didn't go anywhere. In fact, it went lower while gold shined. So, you know, I respect they're entitled to their opinion. My opinion is different. And I just, like I said, the pattern now suggests to me strongly that we're on the verge of a major new gold bull cycle. It's for capital appreciation. I don't own it, Danielle, you know this. I don't own it because I don't believe in, my faith doesn't allow me to. I don't believe in Armageddon and I need to get a cabin and I'm going to need to survive and buy a loaf of bread. That's not the reason why I'm looking at it. I'm looking at it purely as, can it make money? And right now, if you took my daughter and said the only way you get it back, what's higher a year from now, stocks, bonds, or gold? It'll be gold without any question.
Wow. All right,
And
folks.
go Jets.
Hold on. Just one final thought I want to pull up before I let you go. Frank Juster. I was surprised he wrote this. I was like, wow, if he's saying this, he said, I have never been a fan of conspiracies, but in my 45 years experience in trading markets tells me that someone is deliberately suppressing the gold price, especially in the past 2 years. I suspect we will see a reset in the global monetary system sometime soon. Is there funky business going on with the gold price, Peter?
There always has been, but listen, markets, especially commodity markets, have been manipulated for a long, long time. Look, we just had where some big person was very short in a particular market in nickel, and realistically should have paid the price. They bet wrong, and they should suffer from it. Instead, they were rescued, and I believe it was the opposite. If retail people who were long would have got crushed, they wouldn't have made the same rushing. So, commodity markets and markets in general have been manipulated. I think what's more important is who's saying it. You know, you had a great debate, and I've read recently you compared to what's happened in the last year from your debate. I know where I was in that debate. Frank Juster is a man that's been highly successful for many decades in multiple industries, has a humbleness and a philanthropy attitude that you don't see in a lot of people, especially people that made money like Frank has. I've
Yeah.
known Frank. We may differ politically, but I still respect the man. And he was debating a man that was telling everybody to sell everything you have, leverage if you have to, and put it all not just in cryptocurrency, but one cryptocurrency. Imagine, if you will, if I was saying that same thing now about gold or some penny stock, they should throw me in jail for telling people to do all that. So I measure who the people are, what's their credentials, and what real success have they had over a lot of years. So if Frank Juster says something like that, to me at least, it's very worth listening to.
Yeah, well, that's why I brought it up. I had the exact same reaction you did. Okay, Peter, final thought. That's on a personal note. I just want to thank you for a beautiful article you penned regarding our long-standing friendship, I want to say. So thank you. I think it's interesting how you can successfully and beautifully tie in your faith to investing. So
Well,
never
at
change.
one time in my career, Daniela, I was turning the 10 Commandments into the 10 Suggestions, and I was a legend in my own mind. I read my media write-ups, and I bought them hook, line, and sinker. And I watched a lot of financial journalists, and I know there's certain networks out there, and all through your career, you have remained humble, poignant, and even when you disagree, and if someone knows you, you can see it. You don't attack or you don't do any of that. You allow the person to speak. You allow the Max Kaiser to speak and the Frank Juster. So that's very rare in any type of journalism today. So it was very easy to share that. And like I said, you're one of the few people that I very much look forward to speaking to. And you've done a wonderful job. You've started a family, and you're working for a great organization. And I just wish people there were more like you. Unfortunately, there aren't. And so anything what little I do, if this helps somehow and your audience is more encouraged to listen to you, then I feel I did the right thing.
Well, our audience, you're a fan favorite, Peter, so you're welcome to come back anytime. And like I said, I really appreciated that. It's truly humbling, and The support is great. Just keeps me going. So thank you. And we'll see you soon, okay?
Yeah, and I think this year you'll have a good year finally for your NFL football team.
From your mouth to God's ears, right?
You got it. Thank you, Daniela. God bless.
JETS, there we go. And thank you all for watching this edition of Stansberry Research. We'll have much more coming your way. And don't forget to stay on top of all the latest news and videos coming your way by signing up at danielacambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.